Hello, in this presentation we will record the transaction related to short-term investment into QuickBooks Online. We will have a comprehensive QuickBooks Online course soon, if not available yet. We also have a comprehensive Excel course which complements the QuickBooks courses and a QuickBooks Pro desktop version course you can find at the link below. Here we are on the QuickBooks dashboard. We will be continuing with the Get Great Guitars problem. If you've been continuing with us, that's great. If not, that's okay. We will be entering a transaction for the recording of an investment, taking cash from our checking account, putting it into a short-term investment such as stock and bonds. A couple ways we can do that. We're going to do that with the check register. We're practicing here really dealing with cash for a few transactions. We're going to go directly into the check register and put this money from the checking account to a short-term investment account. In order to do that, we're going to go to the checking account down here, or the accounting down here on the left-hand side, accounting item. And then we could, remember, select any of these registers here. Now, of course, we're going to have a short-term investment. We could select a short-term investment account if we had it, but if dealing with cash, that's usually the first thing that's easiest for most people to think about, as it is for me at least. So we're going to take the view register here. We're going to select the register. And what we're doing is we're taking money out of the checking account and we're putting it into the short-term investment. So we can see some of our drop downs here. We have a few different drop downs. We're going to do it with a check. Note that you could have some other decrease. You might want to call it something other than a check, like an expense. And one of the reasons you might have the difference between an expense and a check isn't because it's actually an expense we will be dealing with, because we are going to be dealing with putting it from one asset account to another. The other account's going to be an asset account as well, not an expense. But the expense screen, the only difference is we're not going to have a check register or a check number, in essence, if we're not actually issuing a check. For example, if it was an electronic transfer we're trying to put into the system, then we might choose an expense in order to not have a check number. We're going to have a check number, so we're going to say it's going to be the check. And then we're going to say the date. Now note that the check number, while we're on the issue of check numbers, is already here. It's already populating because it should be populating now. If you were writing the checks by hand, then of course you should be on that check number within the checks that you're having to match up here. If you were to print the checks, you would still have external checks that which you would have to print, and the check number on the external check should match this 1004 automatically generated by the system. That's one of the internal controls related to cash. If you don't have a check number, if this was an electronic transfer and you're just trying to put it in here to put it into the bank account to get your bank account correct so that you can reconcile, you could change the check number possibly to something else, like a transfer, or just delete the check number, or put some other indicator there that'll tell you what you're dealing with. So we're going to have a check number in our example though. So we're going to say that this is going to be as of 01/04/21. Remember that we on this problem will be working in the year 2021, starting with January. Now the check number populated automatically, but we're going to go a little bit out of order in the videos that we've had. So we haven't used check number 1001 yet. We're going to use 1001 here. And after we do this, it'll pick up the next check number. It should be correct after that. And follow along. We have to jump around in time a little bit here as we go through these problems. So we're going to say that we are investing in a Vanguard account. So we're going to put Vanguard. That's a mutual fund type account that we could invest in. I'm not promoting them or not. I think they're pretty good if you're looking for mutual funds. But in any case, we're going to put Vanguard, and we're going to say that. And it's going to be a vendor. We're going to keep the vendor. It's not like a traditional vendor, but we'll keep the vendor here. In other words, we're not buying from them, Vanguard, but we are investing in them, and it's clearly not going to be a customer or employee, so we'll keep vendor, and we'll save that. And memo, I'm not going to have one. We could probably put short-term investment there, would probably be a good idea, but I'm not going to put. Then we're going to put the payment as $12,000. That's how much we're going to invest out of our checking account to the investment. Now the other account's going to be an investment account. So if we select the drop down, we start at the expenses. It's not going to be an expense here. That's where they start, because typically when we buy something, it would be an expense, but it's not in this case. And if we go to the asset accounts, I don't see any short-term investment. Therefore, we're going to need to set this up. Pretty easy to set it up. We don't have to go to the chart of accounts to do so. We just type in, just like we did with the name, short-term investments. So we're going to type in short-term investments. When we select tab, it's going to set this up. It's going to ask if we want to set it up. We're going to say yes. Now, the type of accounts, we could have a bank account, and this may be a reasonable place to have it. That'd be grouping it basically in the cash accounts as we group it on our chart of accounts. I'm going to put it into another type of investment. I'm going to just say it's another type of an asset or an other asset. I'd rather have an other current asset. So we're going to say it's an other current asset. That's just the grouping. It's going to be grouped when we look at the trial balance with balance sheet, assets, liabilities, equity, and then within assets we'll have cash, and then accounts receivable, and then current assets, and then non-current assets, and then property, plant, and equipment. So then on the detail type, allowance for doubtful account, I'm going to put down here investments others. So it's going to put investments other in the detailed account. We're going to keep the name as short-term investments. Description, we don't need one, not going to have one. It's not going to be a subcategory. This would be making it subordinate to some other category. So if we did have like investments overall, mutual funds or something like that, and then listed out our particular types of accounts within them, that's a good way of using the subcategories. But we're just going to keep this as a standalone. Has no beginning balance right here. This will be the beginning balance as we enter this data into this check register. So we're going to say save and close, and had some kind of error, but I said save and close again, and it saved and closed. So here we have that. So here's the short-term investment. This will be the full transaction of the investment for Vanguard. Payment going out of the checking account. We're in the checking account and into this investment account. Let's save it. Let's check the balance here on our checking account. Scrolling down, scrolling to the right just a bit, scrolling up. And we see that we have this adjustment to the checking account, 105,000. We're now going to see the effect of this on the financial statements. So we're going to go back to reports over here, left-hand side. We're going to look at those financial statements. We want to look at the balance sheet. So I'm going to type in balance sheet. There it is, balance sheet. And both of these accounts will be on the balance sheet, so that's the one we need. So we're going to say the dates are going to be 01/01/21 to 01/31/21 tab, January 1st, 2021 to January 31st, 2021. That's going to be the year, of course, we're working in here. So we're going to run this. Here we have it. There's our checking account, 105,000 in it. If we select it, then we see in it that we have this information here, and what we just did was this Vanguard. So we took this 12,000 out, put it into Vanguard. So if we select that item, then we see this transaction here. It will be a check, so we see the check amount. Note what we don't see is the check register where we actually input this data. That's because when we put that data input, QuickBooks creates a check, because that's in essence what we're making. So we basically did a shortcut form of the creation of a check. So we're going to close this back out, and let's go back to the report. So we're going to go back to the report summary, and then scroll back down. Where would the other side go? It's going to go into other current assets. Note we're in order here on the balance sheet. Assets, and then within assets, current assets, and then other current assets, and then fixed assets. We are in other current assets. We have the short-term investment. So we're going to select that short-term investment. And here we have the same transaction, Vanguard short-term investment, the 12. It's going up, it's increasing this account. If we select it, then we're going to go back to that same check, and we see that same information here. So closing this back out, going back to the balance sheet. If we, after every transaction, if we take the time to go through this and look at the financial statements, we really could get a good idea of what the statements are doing. We don't really need to know debits and credits really to do that. We can see if it's going up or down. In order to practice the debits and credits after every transaction, what I recommend doing is going to the reports and checking out the trial balance. And if we select the trial balance and go through the date range of 01/01/31 to 01/01/21 to 01/31/21, January 1st, 2021 to January 31st, 2021, run it. then this is really a good one because you can see everything going on. If you want to practice the debits and credits, you can see that the checking account, if we click on it, the activity will be in terms of debits and credits or amount. It's going to be still increase and decrease, but we have a decrease here, which was a credit to the checking account. And if you go back to the report, you can see that the debit balance went down. It was at 105 and it went down from this transaction. The other account, the short-term investment, it's a debit account, and it went up by the 12,000. So really good to practice. Every transaction, whether you put it into the register or a form, anything you do in QuickBooks, see what the effect is on the financial statements, and you'll get a lot better idea of what is going on within the system.